From Forex Trading Unlocked, and we are here on January 20th, 2020 with a Forex market analysis for you to see how the trading week is starting to shape up. And before we get into it, we just want to show you our disclaimer to remind you that this video is for illustrative purposes only. And with that being out of the way, let's get to our live action screen here. And we have the Forex-Trading-Unlocked.com website pulled up, and we already clicked on the workstation button at the top to pull that page up. Then there are some numbers that are coming out for some of your European currencies and some other currencies, but we're not going to get into those. There's really nothing to cover for today. We have a holiday in the United States, so as the Asian markets have already closed and the European markets are closing, we have probably a very quiet trade for the rest of the day in the currencies. As you can see, we have a little bit of dollar strength showing itself against one of the major currency crosses here, the Euro US dollar. And also it also took out this past higher move low. So we have technically now made a series of lower move highs and lower move lows, keeping this downtrend intact right now. So we are going to remain short-term bears, even though the overall trend is neutral to higher. And as you can see, we have, actually we're just going to just draw this out right to here. So here is our first line of resistance. This is not a very big range that we're talking about right now, so we also don't want to try and pick a bottom, but then also this low over here is actually more crucial. So we're going to put this horizontal ray right here. Okay, so let's get this a little wider out here. So right now we have let's raise this up just a bit there. Okay, now we're on the low. Okay, so we have $1.1064 as our downside pivot. We're trading at $1.1084 right now. So for aggressive bulls right now, you're probably looking at one of your last best chances for a good buying opportunity if this trend is going to remain intact from the overall trend. Remember, this market has been trending higher since the very beginning of October, making higher move highs, higher move lows. So the question is, after we've made this higher move high at the end of the year and now we've been retracing, is this just a corrective move, or is this the beginning of a true bearish to neutral trend instead of a neutral to higher trend? With the dollar index right now in a little bit of a rebound, that's probably giving most of the push for this currency to be breaking right now. Remember, we do have impeachment trials coming out in the United States, so how the U.S. dollar is going to be impacted by that, we will see. We have no idea yet. But we do have Brexit coming up in another week and a half. So on the 31st, actually in 11 days. So I'm going to draw a little vertical line here just to kind of make this look a little clear for you. We'll make this a little darker. And as you can see, the market right now is trending into the support area, and also if you look at it overall, it's kind of sideways overall. So the question is will the trend, will the support continue to be challenged? We'll see. But remember, because of Brexit, I think there's a really good chance that we're going to start to find a little bit of a range trade area. Like if you look overall over the past month and a half, we're going to draw a couple little barriers here. Like if we put this here and then we put this pretty much right here, where's the market been for the past 3 months? Pretty much trading between $1.1151 and $1.1075. So that's not a very big range. You're talking about basically a 75 pip range that the market's been trading in since the middle of October. So we're going on 3 months now of trading in this particular range, where right now it seems to find support a lot, at least over the past 3 months. So if it's going to be a good buying opportunity for bulls, I would say this is pretty much where you're at. And remember, only a failure of $1.1064 here. This last higher move low, this is our key trend low pivot. So a failure from here would take us back down towards this $10 even area, which is still not even that much of a slide. So remember, even if you're bearish looking for a continuation of this trend, you have to have rational expectations, because volatility has been very tight in the euro US dollar. It's just not really trending that much. Well, it takes a very long time to get a big move. I mean, look at with this last higher move high that was set on December 31st. We're talking that it's not quite a full month yet, and the high on that day was $1.1239, and right now we're trading at $1.1084. That's not very much of a slide there. So we have to take this into account when you're looking for how much of a trade can you pull off. So for the bearish side and the bullish side right now, I think there's not very much that you can really count on as we head into Brexit. So we'll see, unless there's a big move in the dollar index. If the dollar really starts to get a rally, then you'll probably see support getting hit pretty hard in the euro. So now let's go look at the pound and see how that's holding up against the dollar. See if we can get a real good bearing on whether dollar pressure is going to be holding or not. Okay, so here we have the second of the two largest currencies versus the dollar. We covered the euro first. And now we have the British pound, which is also obviously impacted by Brexit because they're the ones leaving the EU. So what's going to happen with their market? Well, let's see. It's been trading for months now, pretty much sideways type of range trade. So I think range traders are going to have a really good opportunity over the next couple weeks as this market just starts to tighten up. We'll give a couple good pivots here. This last lower move high swing point right here, this would be your breakout point to the upside. All trading below here, I think, keeps it in a sideways posture. And then I think also this last major swing low that keeps the upward trend intact, I think this is your boundary. So between $1.2906 and $1.3283, I would expect a sideways trade over the next couple weeks as we head into Brexit. Once we get through this point, this barrier at January 31st, or as we get really close to it those last couple days beforehand, I think that's when you're probably going to start to see the pound get volatility start to come into play. Because obviously at that point, I would think you're going to have a lot of traders placing their bets at that point on direction because it's a historic date. Once January 31st comes and passes, then we know that they have until December of 2020 to hash out their trade agreements, and the UK will have full sovereignty and will have left the European Union. Is that going to mean they're not going to stop trading with each other, or they're going to stop trading or whatever? No, everything is pretty much and should just go on as it has. It's just a question of what's the relationship and how they do move goods around and stuff like that. So there are things they need to figure out, and that's a whole nother ball of wax. But for you pound US dollar traders, I think if you're a swing trader, you got a lot of trouble coming ahead of you for the next 2 weeks. If you're a range trader and you like these kind of tight markets, then buying into support and selling into resistance, I think is going to be a very good trade for you over the next week and a half as we head into Brexit. I mean, anything could happen, but as you can see, volatility as a whole has pretty much dried up in this market. And it's also, I think that the overall trend has been bullish. And remember how it went sideways like this before we had the issue with the election with Boris Johnson, and all of a sudden he got elected. That gave a nice little run up, and they had the issues with Parliament. Then that was rectified because of the votes. That all came clear, and then boom, now we had the last one also, was it a week ago or a week and a half ago, whatever, they confirmed the deadline of January 31st that we're moving into. And with all that being said, as far as fundamentals driving this market, I think they're all so washed up that that's creating this basic sideways trade that's going on. Remember, we have the U.S. holiday that's going on today, so for the rest of the trading session for Monday, you can probably expect it to just pretty much be right where it's at. So I wouldn't be looking for any opportunities. If you're trying to trade this market today, I think besides the fact that it's going to go sideways most likely for the next week and a half, 10 days, I would think that today, being that the European markets and everything is all done for the day, that things are going to be pretty quiet in the pound US dollar for the rest of the session. Anything can happen. Holiday markets are thin, but right now, as you can see, it's pretty quiet to start the week off. So let's get another bearing on what's going on with the dollar, because right now there's not showing really any dollar strength or weakness with the pound. So is the dollar going to start to keep on rallying? Well, here we go. We have the US dollar versus the Swiss. The Swiss has been a bull against almost all major currencies for the past month and a half. It's just a raging terror right now. So the one interesting thing is that the dollar index has been very reflective of the trade of the Swiss as far as when it sells off, meaning that when it sells off in the dollar index, the Swiss seems to really catch a nice slide. So that being said, we still continue to make a series of lower move lows and lower move highs. Our big key barrier and pivot for any type of bull to really truly get any strength would be at this level right here, this last major swing high, the 97.64. I mean, look at how far we are away from parity. Right now we're trading at 96.89. We did the last touch at parity back here at the end of November, and we never looked back on this slide. Now remember that the US dollar and Swiss had been doing a dance of parity for such a long time. You could just see it. It was just every time we would get the run up, it would pierce through parity, and then it would fall back a couple bucks, but it kept on holding that 98.5 area pretty well. And all of a sudden, this trend came through, and the dollar index started to sell off, and the flight to quality started to show that when the dollar index really is under pressure, the rest of the world does start to look to the Swiss, and especially since the EU and the UK leaving the EU is going on with Brexit. That also means that a lot of even people looking for stability in Europe, where do they go? Well, they go to the old tried and true Swiss franc. So right now we have a short-term bottom, but it is a lower move low for the trend, and it's only a couple days of a bounce. So we'll see what happens. Right now, this one is actually pretty strong trade going on here with the US dollar. So the US dollar is getting some nice strength, and as far as the European currencies, pretty neutral with the pound. But remember, right now, this market is a aggressive bull. It's been sliding pretty hard for the past couple months, and as you can see how we are back, let's see, it was back in August when we were down at this level here. So let's put this little ray here. This was the last time that we were down in this area before we did this dance with parity for so long. And look at where we're at. We just pierced a little bit below it. We're treading right on it, so we might find some good support here. Remember, we do have Brexit going on, so the question is did everybody already load up on the Swiss that was looking for ahead of Brexit, whatever, in case they're just looking for a stable currency in Europe? Who knows, but pretty much also look at this range here. We might be set in a range now between this last higher or lower move low at 97.64 down to the current low that was set a couple days ago at, 96.13. That's not a very big range right there. You're looking at just a 63 pip range. That's very manageable, and within 2 days, 3 days, it could pierce either one, that's for sure. Remember that right now it is an overall bear trend, so we're just looking at this as a corrective move. And if the dollar index starts to make a turn, right now it's showing a little bit of strength, pushing through resistance and trying to maintain this upward momentum that it's had for the month of January. And remember that too could be a corrective rally. So if that is, unless there really is a true bullish trend emerging in the dollar, this would mean that this current rally right now in the US dollar Swiss is just a corrective move, and we would be looking for an opportunity to sell again eventually. But right now, we definitely don't want to try and pick a bottom, so I'd be careful being a major bull here, and definitely look for opportunities to sell, absolutely, especially underneath this 97.64. Only above here do we start to get in a sideways to neutral trade, because to become a bull, I mean, the way we got rejected at parity and have broken down over the past month and a half, it's pretty severe. So definitely key off of these two pivots, this 97.64, this last lower move swing high, and the low from a couple of sessions ago. All right, let's see what's going on in the US dollar Canada, because it's one of the only currencies that doesn't have something going on. We had the US-China trade deal that went on the other day, and this market just continues to displease. So range traders are making, I don't know, your guys are one's doing well, and the people who are selling all kinds of options. Because right now, this market, just look at this. This is tight. Let's find out this little spot here, how wide this is overall. All right, so overall we have $1.3029, so basically 30. We have a 50 pip range that the U.S. Canadian dollar has been basically trading in for, let's see, 1, 2, 3, 4, 5, 6, 7, 8 to 9 sessions. So that's 2 weeks of trading predominantly since the this is after the holidays, and this is in the midst of, it's pretty funny because we had the U.S.-China deal that was signed, first phase 1 that was signed last week. It does impact Canada to some degree, but as a whole, this is one of the currencies that doesn't have anything really going on, and the NAFTA thing is pretty much set in motion, and all kinds of other things really. There's no fundamental reason for this market to just be snaking and going nowhere. Technically either, there was, I don't know, it just is kind of weird how this dried up in this 50 pip range. If you go back, if we go back over here, you can see that this was where the market had based before. So the question is maybe this is a zone that really holds up the U.S. dollar versus the Canada. And remember, if the dollar bulls are right and the dollar is starting to make a turn, and this is not a correction, it's the beginning of a new rally in the dollar, well then right now we would probably be seeing the base right now for the U.S. dollar Canada being formed before it starts to make a run back up towards this $1.32, $1.32 half area. So how do you trade that? Well, we don't have any dates like Brexit or anything to key off of, so we're just going to use this last swing move high, lower move high as our upside breakout point. Let's change this color so it sticks out a little bit more. All right, there we go. So at $1.3107, this would be our upside breakout point for the Canada. Right now, it's a range trader's delight. Have fun with it. I guess you guys are the only ones that are going to be able to do anything with it. I mean, even look at today's trade. It fell short of this $1.3075 level, which is pretty much containing the tops of the last 8 sessions. And then we have the lows down here too. Like, it's amazing how this above $1.3029. So it looks like guys who are selling certain options and also who are trading the range are doing very, very well with this trade. That's for sure. So look for a breakout, obviously, to the upside, and then obviously to the downside, it would be the lower part of this range, because since it's so tight, usually when it pierces something like this, it actually starts to send a trend move. And then also you have to look at it as, if this is the bottom down here, this is our first high move, we're setting a higher move low. So we would, if we get a breakout to the upside of $1.3107, then this, at least right now, corrective move is definitely going to get fueled for a challenge of higher levels up to maybe $1.31 half area, even $1.32. But that's going to take a little while to unravel, I would think, you know, so just because of the way there's no reason for it to trend. Now, unless we have a serious dollar breakout and where dollar strength starts really to get fueled by whatever it would be that would do something like that. Currently, I can't imagine what it would be. So, if the dollar bulls there is a little bit of a new consensus brewing that the dollar index, the current correction that's been going on, is now going to be completed. Well, that remains to be seen. And then remember, today it's a holiday market, so today is really not a good judge of behavior. So for this market to maintain this range trading conditions, it's kind of fitting in with the holiday. So we're not looking for very much as far as action in this market today. You know where we have a trade setup coming is, and I can't even believe this one. Let's see. Excuse me. Is the oops, wrong way to do this symbol. Those of you who are planning your spring break trips, take a look at this trade, the U.S. dollar Mexican dollar currency cross. So this market, when what did I do here? What did I do here? U.S. dollar Mexican peso. That should be it. Yeah. Okay, here we go. Now it's loading up. So for those of you that are planning a spring break trip, take a look at this one. So if you haven't gone to Mexico lately and you're planning a trip, well, your last good time to go was last summer in August, because since then this market has been coming down in a big way. Look at where the peso is down to. It was at a high of just above 2020, so that's 20 pesos to the dollar, and now we are falling below 1880, looking for some sort of relief. This trend is very, very bearish. I had some people that were interested, and we had some questions about this trade, and I don't know if it's just because they want to trade it or if they're looking to figure out their vacation in the spring, or if they have kids they're sending down from college for spring break. But right now it's definitely getting a little bit more expensive, so the exchange rate is going to be probably, especially if you don't get a good rate at your bank here or something, or if you know a good place down there to get a good exchange rate for the dollar versus the peso, it looks like you're going to be paying, well, let's see, 10%, it's a good 10, well, right now, currently, yeah, you'll be paying over 10% more for your vacation down in Mexico come this spring for sure than you would have if you would have gone last August or last fall. So just to take a look at that trend, if we're now, as far as looking for a buy, don't try and catch a falling knife. Here's an interesting one though. There is a potential buy setting up here. It's amazing. Now we're going to watch this trade. So if you look at today, we planted a low the other day, and then we have this little trade that's going on, shaping up here. Today's little buy up day here isn't necessarily the biggest thing in the world, but it is a short-term reversal neutral signal. It's called a Harami buy. So let's just say that the markets, especially since it's a holiday in the U.S., that the currency markets really dry up and this market settles where it's at right now later on this afternoon. That would complete, like I said, the Harami buy. That also sets us up for tomorrow. And then if tomorrow we get a nice positive day again, it doesn't necessarily have to be extreme, but if it is a positive day, that would set us up for a 3 inside up buy signal. And that is a very good short-term signal for bulls to catch a potential corrective move higher. I never want to try and trade against a trend like this. Usually it's better to look for corrections and wait to find selling opportunities again, and trade with the trend. You know, you always want to trade the action, not the reaction. But if we do have a very valid type of buy signal that comes into place, well, then that's where you have to weigh the opportunities for potential swing trades for sure. And this would be an opportunity that we'll see whether it does set up or not, but let's see what happens by the close. I mean, if the market falls back and ends up lower today, then obviously the trade setup is definitely not going to happen. And this is also, like I said, it's a neutral to higher. It's also a weaker signal, but the one tomorrow, if that does set up, like if we do get the Harami today, that does help us for the neutral to higher outlook. If you're an aggressive bull, this would be the place to get long and get long against the current low of, let's see, it was yesterday, the low was 1865.05. So in 1860. Okay, so today was the low of 1864.51. So today's low would be your risk basis. So for aggressive bulls, you're looking for a buy setup today. So with a positive close, that sets you up. And then tomorrow, if we have a follow through with a second positive close, that would complete the 3 inside up buy signal, and we will then follow that as well and give you the trade levels for it. We don't want to spoil the potential trade setup yet. We need it confirmed before we start giving you trading levels to the upside. So here we're looking for a buy signal in the Mexican peso. So we found one potential trade. And remember, folks, if you're planning your vacations, then this is a good time to look for this buy signal, because if we can find a nice rally, you can do your conversion and get a better rate. Especially if we can get a move that goes up towards this 19 pesos to 1920 pesos to the dollar, because even that, no matter what, is still a very good exchange rate and a safe place to at least buy before you go on a trip, because if it goes higher, you don't really lose that much. So it's not that much of a difference, but if it goes lower, then it really starts to increase the cost of your trip. Just to remember how these currencies do play and understanding how they move. So we looked at both the North American trade currencies against the dollar. Now let's go to the US dollar, Japanese yen, and see what's going on there. All right. This is the bull that just doesn't want to stop. Of course, this is the market that we've been calling for a while, that no matter what the U.S. dollar is doing, the U.S. dollar is rallying against the yen. So now this is not making higher move highs, but we are floating against resistance. I would expect this to be a grinding bull higher. I would be very leery of selling this market whatsoever. If anything, I would look for corrections to buy into. To sell this thing is very hard, because when the dollar index and the US dollar is strong, this market seems to continue to press on higher. When the US dollar sells off, this market continues to go higher, meaning the dollar stays strong against the yen. Excuse me. And only if you have a very, very intense sell-off with the dollar does it seem that the Japanese yen will gain some strength for a short term. I mean, look at how it planted this low, this recent low. This was quite the extreme this day, how it slammed new lows and then, like a balloon underwater, rallied so hard, and then within a couple sessions finally breached this resistance to set these new higher move highs. That's a very strong bull, no matter what's going on. This has nothing to do with the dollar index strength, because, like I said, in the 4-month correction, the US dollar has been going lower against all the major currency crosses, except for the yen. So this trade, no matter what, it's a bull. I wouldn't fight it. It's just like the Swiss franc. It's a bull against every currency out there right now. So if you're going to go against the current trend, wait for opportunities. I would say wait for opportunities to for any correction to turn around, because I think those markets, no matter what the dollar index is doing, are going to maintain their bullish trend. So bullish to the Swiss franc, excuse me. So, and then also bullish the US dollar versus the Japanese yen. Two solid trends that we figured out today that we're looking at, besides the Mexican peso trade. So Australian dollar, US dollar, let's see how this one's shaping up. Because of the trade agreement that was signed last week, that was beneficial, that was good for the Australian dollar, US dollar. And right now, because of dollar strength, you can see the Australian dollar is weaker today. However, it has not made lower move lows like the euro. So it'll be interesting to see where you're at here. This is a very key, critical support area for this currency, and especially with the trading deal that was the phase 1 that was signed. It's pretty good for Australia, so it's hard to see that the US dollar, unless it really starts to gain strength, just for whatever fundamental reasons it would come into the market. I don't know, as they start the impeachment trial, how that would give dollar strength. I would think that there would be a sell-off in the dollar as we go through the impeachment trial, even though the economy is doing well and what have you. You know, the fact is that it is still, you know, it's a fundamental variable that it's hard to put a gauge on, but typically a situation like this would be negative for the dollar, which would give support to currencies, especially like the Australian dollar, US dollar, which is in a neutral to uptrend, and definitely an uptrend since October, and for sure since December. So remember, January has been a sell-off month so far. It's been a corrective month for the dollar. The question is, how much longer can this strength, you know, continue? Because all these other markets are in trends against the dollar longer term. So if the dollar truly is becoming a bull, a raging bull, something that's really going to lift itself back up in this trend and continue to trend higher over the next few months, well, that doesn't bode well for all the currencies that we've talked about so far, except for the Swiss franc. And then, excuse me, it wouldn't be good for the Australian dollar, US dollar either. Excuse me. Got a little bit of a frog in my throat starting out on Monday morning. So the New Zealand dollar, US dollar here is our next currency to talk about here, because it's in the same trade zone. So we see that the yen is a bull, or the US dollar yen is a bull, and the Australian dollar US dollar is looking weak. And so is the New Zealand dollar US dollar. However, this one also is not making newer move lows. So it's on the offer, so it looks like a hammer, like it wants to just keep on banging support. But remember, this market's in an overall uptrend as well, a very fierce one. So for it to be correcting like it is and starting to base, it's pretty much a normal thing. So we're going to use this last swing low here, and this last, oops, and then this last swing low here, pretty much as our support zone. This, I think, would be the extreme basing area where this market would correct to. If the overall trend is going to maintain itself, this would probably be the area where you would see the support come in. And as well as if you look at the trend we have going on this way. All right, there we go. So for it to come down into the support band and then bounce off of this rising support here, this blue line, that keeps the trend intact, and that would be a very good basing area for this currency to ground itself before it starts to make another move higher. Remember, this market's been trending higher for the past few months, but from December, the whole month of December, look at how extreme this was. This market trended very strongly against the dollar, and this was when the dollar wasn't getting hit that hard against other currencies. But this one, it just kept exploding, and even when it's tried to pause and whatever, it breached it again. See how it just pierced this? And markets go out like they came in. So since it was so extreme, we've had this sell-off, but this is an overall bull market. And see if we had this resistance part where it gained support, and it looked like it kind of wanted to just base and kind of go sideways here and maybe even correct a little bit. It never had that opportunity. Just kept on piercing higher move highs and higher move lows. So right now we'll look at this as our basing opportunity. Will we get down there? Who knows? If the dollar continues to be strong, odds are very good that we are going to continue lower into this area. Then the question is, will we finally find support, and then will dollar weakness come into place? Because even when there was dollar strength, this market was actually continuing to rally against the dollar. So we'll see how this right now, how it's going to manifest. I think it's currently a corrective move. You have to view it as that because the overall trend is higher. It's just been lower over the past few weeks as we've started off the 2020. But if you look at also the last week and a half, it's really been sideways, just riding the support levels more than the resistance levels. So basically settling just a little bit lower each day. Not really truly very much market action. In fact, the volatility has been pretty tight. There's not very much of a range today either. We have a high of 66.24, 65.93, so it's 31 pips. Not a very large range considering they had most of their trading day is over. So now we're just relying on what's going on with the US dollar and the US markets right now. And with that being said, we want to go back to our euro US dollar and see how this is impacting or being impacted by the US dollar strength. And it continues to hit its lows. So, okay, traders, so for a holiday market, like I said, step away. You don't want to be here. This could be the day where it's definitely just going to keep on hammering those lows. So that's a good thing now, because if there's anything we can figure out from this trade, if it continues lower and it takes out these support levels, well, then we know we have a neutral to bearish trade for the euro. It also confirms dollar strength, and then we can go back to the US dollar, Mexican peso over here, and that would help us out with our potential buy signal in the US dollar Mexican peso. So we'll follow through with this again this evening with a look at tomorrow's trading to see how this manifests itself. But the way this is shaping up today on a holiday market with thin volume and U.S. Banks being closed and everything else being done now for the day pretty much, let's see how this shapes up, and then we'll look at some potential buy targets for if we get the buy signal, where we can look for a correction to go to the upside and ride this dollar bull that seems to be shaping up right now. So with that being said, I want to thank you very much for your time. Please subscribe to our our YouTube channel. It's Forex Trading Unlocked. Just do a search and you can find all our past our lessons and other things that we produce, and as always our most current videos streamed to you with Forex market analysis. So we'll be following this Mexican peso buy signal later on this evening, and hopefully see you later. So check us out, and you'll be emailed from YouTube when we go live if you've subscribed to the channel. So with that being said, good luck, and we'll look